One. Right, in this series of videos, we're going to look at an example of balance day adjustments. Now, I'm going to show you two things. I'm going to show you the general journals entries. I'm also going to show you how to make the adjustments to the trial balance, because for most of your ones in the exam, you're just going to make those adjustments straight onto the trial balance so that you can use them for the income statement and the statement of financial position. Right, first let's look at our trial balance, and on our left hand side is our debit entries, and this is where we'll find our expenses. So these are our regular payments by our business, our assets, which are the things that they hold for future benefit to the business, and our drawings, which is related to the owner. So remember, these are sole traders that we're looking at, and so therefore we just have owners. On the credit side, the right hand side, we'll find our income, our liabilities, and our capital. So remember, with this one, we have to know about trading businesses, that are businesses that sell just items, and service ones which provide a service, of course, for example, hairdressers. We a trading business, we'll know it's a trading business if it's got cost of goods sold and it's got sales. Our service business will have service expenses related directly to the service that they provide, like plumbing expenses if we were a plumber, and they would have fees received. Okay, so that's how you know. You need to practice doing both trading and service. I'm only going to show you trading here, but you need to actually practice ones that are service ones as well. So there's plenty of exercises in your book, in your workbook, that give you exposure to both, and in your notes you've got the income statements for both the trading and a service one, and that's in a module 2 of your notes. Okay, so let's get started now. So this would be in your resource material. You would get a trial balance, and underneath it you get some additional information. Now, there's probably a lot more additional information here than you normally would get. That's because this one covers pretty much everything you need to know. Okay, so let's start with the first one. Shares in Briscoe Limited have a current market value considering to be a fair value of $34,000. That's going to be a note to statement of financial position, and we're going to come back to that one later. Right, our first balance day adjustments are dividends are owing $1,200. So the first thing we want to decide, is it an income or is it an expense? So we're going to look for dividends on our trial balance, and we've got dividends received. So that means it's an income. So that means they are owing. So in this case, we've got accrued income is going to be our account. Okay, and so let's do the journal entry. So date is 31st of March. Right, now if we go back over here, we can see that accrued income is a debit. So is a current asset, so that means it's going to be the debit. So we're going to debit accrued income for $1,200, and we're going to credit our dividends received. And that makes sense, because for dividends received to increase, we need to credit it. Okay, so because it's an income. Right, so on our trial balance, if we're doing it on our trial balance, we're going to add an extra $1,200 to dividends received to get $2,200. And we're going to add in on our current asset side accrued income of $1,200. Okay, right, that's the first one done. Now we've got write-off additional bad debts for $460, including GST. Right, so we know that bad debts is going to affect our accounts receivable, and it's also got GST in it. So 31 March, bad debts is going to be our debit because it's an expense. We're going to have GST debited, and we're going to credit accounts receivable because we're reducing it. So we're crediting crediting accounts receivable, and we're going to do it for the GST inclusive amount, which in this case is $460. Okay, and our bad debts is the GST exclusive amount, so we're going to get our calculator. And we're going to do 460 divided by 1.15. Oops, I didn't get my point in. I just need to shift my calculator. It's hidden behind my picture a little bit. Okay, so we need to go backwards. 1.15. Okay, so that's 400. And GST is going to be 60. Right, so now we've done that, we can make our adjustments on our thing. So bad debts is 900 because we add on the 400. We're going to reduce accounts receivable by 460, so we're going to get 32,000. And we're going to debit our GST, so we're going to reduce our GST by 60. So it is going to be 4,300. Right. Next one is adjusting our allowance for doubtful debts to 5% of accounts receivable. So we're going to, first of all, find out what 5% of 32,000 is. So we're going to take 32,000, times it by 0.5, and it'll give us 16,000. Whoops, wrong. Times it by 0.05, and we get 1,600. So that's 32,000 times 0.05, which will give us 1,600. Now, that's what our allowance for doubtful debts needs to be. We've got 900 at the moment, so we've got to make it go up to 1,600. Okay, so our doubtful debts the expense that we create needs to balance be how much we need to increase it by. So 1,600 minus 900. So we need to increase it by 700. So that's going to be our doubtful debts expense. Now, sometimes you might actually go the other way and you have to decrease it. That means that your doubtful debts will still go in your income statement under administrative expenses, but it will be in brackets because you're going to take it off instead of adding it to the total of administrative expenses. So let's look at the journal entry. 31 March. It'll be a debit to doubtful expense because it's in this case is an expense for us, and a credit to allowance for doubtful debts because it's increasing. Okay. Now, if we were decreasing doubtful debts, that journal entry would be around the other way. So our allowance for doubtful debts would be debited to decrease it, and doubtful debts would be the credit. Okay, so you can get it either way. Right. Next one, office wages owing. So our office wages owing, office wages, find that, here it is an expense, so that it's owing, so that we know it's going to be accrued expenses. So 31 March, we need to increase our wages, and accrued expenses is a liability because we still owe it. Okay, and the amount for it will be $1,000. And on our trial balance, we will increase wages, office wages, by 1,000, and we'll put in accrued expenses for 1,000.